Hey guys, how's it going? JD here. So this week we're just going to look at how price action can be used in any market. So the first market we're going to focus on is the S&P 500. So this is a chart of the S&P 500 within pocket options. And so we just want to look at how it really doesn't matter what asset you're trading. Price action works on all of them because price action is simply trading from price movements. We're on the hunt for certain setups that we know always occur, and it doesn't matter the asset. It's just the way prices move. It's just the way the market moves, because we understand the market cycle, the rule of two, and the power of trading with the 21 EMA for our entries. It just doesn't matter. So this week we're going to just take a dive at that and show you how it doesn't matter. So S&P 500, right? We're going to start from the left over here, moving sideways. Then we get one trend break. It's weak trend break, but two legs up to a new high. Okay. So we would know that this market cycle could possibly be over. So what we would have to do is wait for some confirmation of that. And we get it right here when we get this high, push down, lower high, nice strong signal candle closed, almost on its low, lower than the candle to the left and the stem. And it's right off the EMA. Let's put a arrow on that. That's exactly the type of confirmation we would be looking for to say that this uptrend is probably over. We would enter right here. Excuse me. We would enter right here. And there you have it. 1, 2, 3. Easy one. Okay. Then you actually get another one right here. Another high, push down, lower high. Now this is a strong candle up. That's a hammer up. So that may be scary, but typically when you get a hammer up, the next candle should keep going. If it's, going to have any buy pressure behind it, but this one didn't. It ran up, trapped people who did think that and went long. This is actually, let me show you something else. Let me show you why this was a trap, because this from the top, this is a first entry, push down. This is a second entry long, but we already know the market cycle is over, so you don't take this second entry long. And you want your second entry longs to happen with trend off the 21 EMA. Remember, your best entries are always off the 21 EMA. So this is a trap. Everybody who's taking this second entry, they just got trapped. Okay. And then if you see the failed second entry long, with this candle here makes it fail, you take this as a second entry long failure, and it's also a higher low. So it's two setups in one. That's a lot of evidence right there. You take this one, 1, 2, 3. That's another one. Then you get this low here. What do you have? Push up, push down. That's the first entry, but we don't take first entries. And if you're patient, pushed up again. Now you get a second entry short right here, right off the EMA, closed on its low, closed lower than the bar to the left. 1, 2, 3. This one is close. Depending on your entry, maybe you win, maybe you lose. I don't know. That one's close. You maybe lost that one, but then you got another high, push up, lower high. You take this one. It's pretty close to the EMA. I don't know why my arrows be ugly sometimes. Take this one. It's pretty close to the EMA. If you did lose this one, you can get it right back right here. 1, 2, 3. Got it back real quick. Now we're trending. Your target is down here. For certain, hey, the downtrend is on. Your target is down here. I'm definitely going to ride it all the way to this point right here. So then you get another pullback. This one didn't break higher, so I'm actually not taking that one. And it's too far from the EMA. Would have worked, but, there was already 1, 2, 3, 4 wins right here. So 3 or 4 wins right here. So I'm probably not taking this one. If it had a broken higher off the EMA, yes. But you got doji, and barely broke lower. I just don't like it. So you missed some. Right. And then again, all through here, we're too far away from the EMA. This, you got a low here, push up That's the first entry, so you don't take it. But if you wait and take, well, this, you would want this when it broke lower. It didn't. This would have been your signal candle for a second entry short. So you missed that one. But if you wait, because again, this is the first trend break, so you're still expecting to test down here. So, you know, like I said, from here, first entry, second entry short, you can't take it back signal candle. But if you wait, you get a high push down. Now look at the rejection here. You would have noticed that, or you should notice that. Like, ooh, they tried to go higher, couldn't. Look at the rejection on that stem. Probably gonna go lower. And then, so I would say if the next candle breaks lower, closes under EMA, I'm going, because this is a high pushed up, lower high. Then you get a beautiful signal candle, close on this low, close lower than the bar to the left, off the EMA. That's beautiful there. That's beautiful there. You take that one. 1, 2, 3, homer. Okay, but then it pushes back up in here, and so now you do nothing, because look at the EMA. EMA is sideways. This candle didn't make the new low. Still didn't hit this target. So now you sit on your hands. All right. Sit on your hands. You gotta see what happens. You gotta see what happens. And then when you get this strong push up, and then this candle coming back down, by this time the zigzag probably has done this. Now you can see 2 legs back. First, for 1 leg back, push down. Second leg back. So at this point, again, it's time to wait for a signal that we're going to go lower. That signal will be, again, something that breaks under the CMA, and you get another lower high. Here's a high, push down, lower high. Huge signal candle right off the EMA. Our targets is here and still down here. Go time. You take that one. 1, 2, 3. Good win. Wasn't easy, but it was a good one. Then we surge back up again and push down extremely strong. Now, I have to admit, this is kind of a first entry, but just the fact that you had 1, 2, 3, 4, 5, 6 greens up, and then it took it all back in one candle. And I kind of can see this as a high, push down, come back lower high, a bigger version of a lower high. I mean, this signal candle is undeniable. Remember, our target is here and here. This is riskier because it's a first entry, but I like it. I must say I like it, because it's also a high, lower high with the biggest signal candle we've seen since we've been on the board. Our target is here, here. You got 3 targets, and again, it's right off the 21 EMA. I like it, I must admit, and it's an easy win. It's the homer. 1, 2, 3. Then you get our regular high, push down, lower high. Right here, easy money. 1, 2, 3. Now down here we're a little bit too far away from the EMA, so I'll probably skip this one. Although, yeah, I skipped this one because look, we've already passed our target. But sometimes that just lets you know a reason to take this trade is because this is 1 leg, 2 legs back. So this would be the second leg. So we would be expecting a leg of this distance. Let's see if it made it. It made it. So if you're counting legs, I mean, if you're going off the distance of the leg, then you might take this right here. But for me, it's too far away from the EMA. But that's a very nice strong signal candle there. And I'm expecting a leg of this distance. So that's iffy. I'm not gonna mark it though, because it's just too far away from EMA. Your best entries are off the EMA. And that's it, right? So this is the S&P 500. You guys have seen me trade, all of the currencies. And so I mostly be on currencies, but I've kind of been hitting them stocks lately. And so I just wanted to illustrate that it doesn't matter, which asset you're on, especially on pocket options. It doesn't matter which asset you're on. Price action works everywhere. And this is just another work study chart lesson to show you how you could have just benefited from simple, basic price action trades. But again, for last recap, as I always say, the best entries are off the 21 EMA. Let's count them up. Let's count all the EMA touches that worked. 1, 2, 3, 4, 5. 5 out of the 1, 2, 3, 4, 5, 6, 7, 8. 5 out of the 8 were EMA touches, and they all won. You know, the proof is in the pudding, right? So that will do it for the work study lesson today. As always, I have a trade example for you, so stay tuned to that. Hey, this is a great time to like, share, subscribe. Please, 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 please look out for your boy, right? Look out for your boy. Let's keep growing. Let's keep helping people learn how to trade. Let's keep making it easy for everybody. All right. So my name is JD. And as always, I wish you increase on the Sutton. Bye-bye. All right, here we're getting the second entry long. Ooh, nice signal candle right off the EMA. I'm in 3 minutes. Let's see what happens. I mean, this is what you call a home run. It really doesn't get any cleaner than that. I mean, that was beautiful. Second entry long right off the EMA. As usual, the EMA, your best entries are off the 21 EMA. Good trade, JD. I got plenty more where that came from. Watch this video next and learn how to increase on the Sutton. Bye-bye.